USDA's early forecasts show Brazil's corn and soybean production continue to grow in 2027, in line with the growth trend seen over the past several years. But these projections are being released at a time when conditions on the ground look very different for Brazilian farmers. They are facing higher fertilizer costs, lower margins, double-digit interest rates, greater reliance on debt financing, and the possibility of a strong El Niño. In this video, we'll look at the short-run challenges producers are facing and why USDA's early 2027 forecast may be harder to achieve than they first appear. Before you get started, don't forget to like this video and subscribe for more updates from the Purdue Center for Commercial Agriculture. The latest USDA report projected continued growth for Brazil's 2026-27 soybean and corn crops. This projection appears to be largely in line with the country's long-run production trends. In other words, USDA's early estimates don't suggest a slowdown by Brazilian farmers. However, several factors could make those forecasts harder to realize. Fertilizer costs are one of the main reasons to question whether Brazil's corn and soybean production outlook will be fully realized. Prices have come down from recent peaks, but they remain high enough to affect planting and input use decisions. Brazil is highly dependent on imported fertilizer. Unlike the United States, Brazil doesn't have a strong domestic fertilizer industry. In 2025, fertilizer imports accounted for about 88% of total fertilizer consumption in Brazil. The recent increase in fertilizer prices, especially urea, happened when Brazilian producers were beginning to buy inputs for 2026-27 crop season. So, high fertilizer costs may not necessarily prevent farmers from planting, but they could affect how much fertilizer producers apply, reduce margins, and make it more difficult to reach USDA's early production estimates. Another important factor is low margins. For corn and soybeans in Brazil, farm margins are already close to break-even, at their lowest levels in nearly 2 decades. Lower soybean prices, higher production costs, and weaker port premiums have all reduced profitability, and in some cases, margins may have even turned negative. When profitability is under pressure, farmers have less incentive to expand acreage. Financial conditions are also become more challenging. Interest rates in Brazil remain high, with benchmark rate reaching 15% by year. As borrowing has become more expensive and lenders has become more selective, access to credit has turned another source of pressure for producers. With less room to rely on their own capital, producers are turning more often to banks, trading companies, and multinational input suppliers. So, debt levels have become a bigger concern across Brazil's agriculture sector. Weather is another major source of uncertainty. A potentially super El Niño could develop during the 2026-27 crop season. El Niño is likely to emerge during this summer and continue through the Northern Hemisphere winter. The last El Niño event of comparable intensity occurred in 2015-2016 when Brazil had significant crop losses. During El Niño events, weather impacts can vary across Brazil. Parts of Central West and Northern Brazil, where soybean and corn production are concentrated, may face reduced rainfall. Southern Brazil, on the other hand, may see excessive rainfall. Because Brazilian agriculture is spread across several regions, some areas could experience droughts, while others deal with too much rain. In Brazil, soybean planting and second crop corn planting are closely connected. If soybean planting is delayed, the soybean harvest can also be delayed. That can push second crop corn planting later into the season, increasing weather risk and potentially reducing yields. In summary, if Brazilian production comes in lower than expected, it could support higher prices than would otherwise occur and provide some relief from low commodity prices and profitability pressures for U.S. corn and soybean producers. You can read more about this in the full article on the Purdue Center for Commercial Agriculture website. The link in the description below. Thanks for watching this AgriBrief. Subscribe for more research-based insights, and we'll see you next time.